Welcome to your deep dive.
Great to be here.
So today, we're tackling something really fundamental for anyone running a small business, or even just, thinking about it.
Mm-hmm.
How do you actually handle your business finances, specifically the banking side of things?
Right, getting that set up correctly from the start.
Exactly. And we got some great sources from you all. We looked at Merchant Maverick on why you need a business account.
Yeah, they laid out the core reasons really well.
And the business guy who walked through actually opening one, especially for LLCs.
Some very practical steps there.
Plus, your friend Andy gave us a rundown on some of the top account options out there now.
Yeah, lots of choices these days, especially with fintech.
So our mission today, let's distill this down. What are the essential steps, the actions you need to take to get your business banking sorted and really understand why it matters so much?
Let's do it. It sounds basic, maybe, but getting this right, it really prevents a lot of headaches later on.
For sure. So step one seems to be understanding the why. Why separate business and personal money at all?
Absolutely. This came up everywhere. Merchant Maverick was super clear on this.
Yeah, they pointed out the obvious first. It just makes tracking income and expenses way, way harder if it's all mixed up.
Oh, completely. Imagine trying to do your books or figure out your profit. It's a mess. Tax time becomes a nightmare.
Definitely. But Merchant Maverick also stressed a much bigger reason, right? Especially for certain business types.
Exactly. This is crucial. If you're set up as a partnership, a corporation, or an LLC, this isn't just good practice. It's often a legal necessity.
Okay, unpack that a bit. The legal side.
Well, think about why you formed an LLC in the first place. Usually it's for liability protection. To create a separation between your business debts and your personal assets, like your house or your savings.
Right, that legal firewall.
Precisely. But if you start mixing funds, paying personal bills from the business account or business expenses from your personal one, you risk breaking down that wall. It's called piercing the corporate veil.
Uh-oh, that sounds bad.
It can be. If your business gets sued or faces bankruptcy and you haven't kept finances separate, a court could potentially decide that your personal assets are fair game to cover business debts.
Wow. Okay, so that separation is fundamental to the whole point of having an LLC or corporation.
It really is. You undermine that protection if you commingle funds.
Merchant Maverick also mentioned professionalism. Seemed like a softer benefit, but still important.
Yeah, definitely. Think about it. When customers pay you, the check is made out to your business name, not just you. When you pay suppliers, it comes from the business account.
Ah, okay. It builds credibility.
Exactly. It just looks more legit, more established, helps build that brand identity and trust. People see you're running a serious operation.
Okay, so the why is clear. Easier tracking, vital legal protection, and a more professional image. Makes total sense.
Yeah.
So if everyone's convinced, okay, separate accounts it is, what's next? What do you actually need to open one? Step two, the groundwork.
Right, at practicalities. And this is where both Merchant Maverick and the business guy had some good details. It's not quite as simple as opening a personal account.
You need more paperwork, basically.
Yeah. First up, almost certainly you'll need an EIN, an employer identification number.
The business's tax ID number, essentially.
Exactly. Think of it like a social security number, but for your business.
Yeah.
And Merchant Maverick made a good point. Get this directly from the IRS. It's usually free.
Good tip. Don't pay some random website for it.
Definitely not. And you'll need this EIN for lots of things, not just banking, taxes, hiring employees.
Okay, EIN. Check. What else?
Business licenses. This one can be a bit trickier because it varies so much.
Right. Depends on your city, county, state, your industry.
Precisely. Merchant Maverick mentioned you might need licenses at multiple levels, so you really need to research what applies specifically to your business and your location.
Worth putting the time in to get that right up front.
Absolutely. Avoid problems down the line. Then the bank will want to see your formation documents.
Like the official paperwork that created the company.
Yeah. The business guy mentioned this specifically. Your articles of incorporation, if you're a corporation, or articles of organization for an LLC.
Makes sense. Proof the business legally exists.
And they might also ask for other things Merchant Maverick noted, like documents showing who owns the business.
Ownership agreements, maybe?
Could be. And sometimes proof of income, like bank statements showing revenue, perhaps.
Okay. And the business guy had that interesting tip about presentation.
Yeah. He suggested bringing your corporate kit, That formal binder with all your documents if you have one. And just generally looking professional.
Like you're serious about this.
Yeah, basically don't look like you just rolled out of bed and decided to start a business 5 minutes ago. Make a good impression.
Laughs slightly. Good advice. Okay, so step 2 recap. Get your EIN, figure out your required business licenses, gather your formation documents, know your ownership details, maybe have some income proof ready, and maybe wear a clean shirt.
Pretty much sums it up.
All right, so you know why, you've got your docs. Now, where do you actually go? Step 3, navigating the options. And your friend Andy gave us a lot to think about here.
He really did. It's not just the big bank on the corner anymore. The fintech scene has exploded with options.
He talked about companies like Novo and Lilly first. These are mostly online, right? Partnering with banks behind the scenes.
Yeah, that's the model for many of them. Novo, for instance, Andy uses it himself. Big pluses he mentioned were no minimum balance,
Always nice.
and they refund ATM fees worldwide, which is great if you need cash sometimes or travel.
Candy. What else stood out about Novo?
Integrations. He mentioned linking up easily with things like Stripe, Shopify, sometimes with perks like discounts on processing.
Oh, that's useful. Streamlining things.
Definitely. And that reserves feature he liked for automatically setting aside money.
Right. For taxes or if you follow that profit first system, smart.
Very smart. Takes a discipline out of it. Plus, they have invoicing built in and even a partnership with LegalZoom for business formation. Seems quite comprehensive.
Okay. Novo sounds solid, especially for online businesses. Then there was Lilly. Andy positioned that one more for taxes and accounting help.
Yeah, that seemed to be their focus, helping you manage the financial admin.
How so?
Features like easy expense categorization, a receipt scanner, and the big one, automatic tax savings, setting aside a percentage of income specifically for taxes.
Oh, like the Novo reserves, but maybe more focused on taxes.
Kind of, yeah. Andy seemed to really appreciate that simplicity, and they generate expense reports, and this can even pre-fill a Schedule C form for your taxes.
Whoa. Okay, that could save hours and a lot of stress for sole proprietors or LLCs filing that way.
Huge potential time saver. Plus, they offer interest on savings and cash back on the debit card. So really geared towards simplifying the money management side.
Lilly sounds very targeted. What about Mercury? Andy mentioned that, especially for startups.
Right. Mercury often markets to tech startups. But Andy's point was their basic account is free and pretty robust for many types of businesses. No monthly fees, no minimums.
Good basics.
And they offer virtual and physical cards for employees with spending limits you can set. Handy for teams.
And potentially more down the line.
Yeah, he mentioned they offer higher yield savings options, like treasury bills potentially, and access to venture debt or other borrowing as you grow. So maybe good if you have scaling ambitions.
Interesting. Okay, Mercury for growth potential. Then Relay. Andy highlighted organization there.
Yes, Relay seems excellent if you need to really segment your money. They let you open up to 20 individual checking accounts under the main account.
20. Wow, for what?
Think different projects, operational expenses, maybe payroll, tax savings, really granular control. Plus, you can issue up to 50 debit cards for your team.
Okay, that sounds powerful for larger teams or more complex operations.
And they have a strong accounts payable system built in, too.
Yeah.
So yeah, great for organization and team management.
Lots of fintech options.
Yeah.
But Andy didn't forget about the old school, did he?
Nope. He made a really important point about local credit unions.
Right. What's the advantage there?
Well, they often have great terms. Maybe no fee accounts, sometimes decent interest rates. But the big one, he stressed, a physical place to deposit cash.
Yeah. That's still a thing for many businesses. Not always easy with purely online banks.
Exactly. So even if you primarily bank online, having a local credit union relationship for cash handling or just that, face-to-face service can be really valuable.
Good point. Can't just mail a stack of 20s to your online bank.
Chuckles lightly.
Not easily, no. Okay, so step 3 is really about exploring this whole landscape. The fintechs like Novo, Lilly, Mercury, Relay, each with their own niche. And not forgetting local credit unions. Think about what features matter most to you.
Which leads perfectly into step 4, making the actual decision and comparing carefully. Merchant Maverick had some good warnings here about fees.
Yeah, business accounts aren't always like personal ones fee-wise, are they?
Often not. The fee structures can be different, maybe more complex, sometimes pricier, so you really need to look closely.
What kind of fees should people be watching out for?
Well, Merchant Maverick listed several. Any tempting introductory offers what happens after they expire. Interest rates, obviously, on checking or savings, but also on lines of credit if you might need one.
Transaction fees.
Definitely. Fees per transaction, or maybe you get a certain number free per month, early termination fees if you leave, minimum balance requirements, and really dislikes those.
Yeah, he made that clear.
And penalty fees, like for overdrafts. You
Yeah.
need to read the fee schedule carefully.
No nasty surprises later. But it's not just avoiding fees, it's also about the positive features, right? What you get.
Exactly. You need to weigh the costs against the benefits. Think about what you need now and maybe what you'll need later as you grow.
Like what?
Merchant Maverick mentioned building business credit. Using the account responsibly can help establish that credit history, which is crucial for future loans.
Good point. Long-term thinking.
Also, merchant services the ability to accept card payments, though as they noted, sometimes you get better deals using a separate payment processor.
True. And those integrations Andy talked about.
Super important. If you live in QuickBooks or rely heavily on Shopify or something else, does the bank connect smoothly? That can save so much manual data entry and potential errors.
So look beyond just the monthly fee. Think about the whole package.
Absolutely. Does it make your operations easier? Does it support your growth? Does it save you time? That's all part of the value.
Okay, so step 4. Do your homework. Compare fees meticulously, but also evaluate the features. Building credit, merchant services, integrations. Choose what fits your business now and where you see it going.
That really sums it up. So just to kind of bring it all home.
Yeah, let's recap the key takeaways.
Okay, first, separating business and personal finances. Non-negotiable, really. For practical reasons, legal protection, and just looking professional.
Got it. Second.
Get your documents ready before you go to the bank. Your EIN is key. Understand your licensing needs. Have your formation papers.
Preparation is crucial. Third.
Explore your options. There's a wide world out there now. Fintechs like Novo, Lily, Mercury, Relay offer amazing specialized features. But don't ignore local credit unions either, especially for cash or local service.
Know the landscape. And fourth.
Compare smart. Look closely at fees, yes, but also weigh the features, credit building integrations, services against your actual business needs now and for the future.
Makes sense. Choose wisely based on value, not just the lowest fee. Well, this deep dive was all about giving you that solid foundation, those actionable steps for setting up business banking the right way.
Hopefully some useful pointers in there.
Yeah, we really hope it sparked some aha moments and gave you clear things you can actually do. We're always cooking up new deep dives like this one.
Trying to tackle topics that help you learn and grow.
So if this was helpful, maybe follow us, give us a like, subscribe. That way you won't miss what's next.
And we genuinely want to hear from you too. What other areas, what topics are bugging you or seem confusing? What should we dive into next?
Yeah, please share your suggestions. We love getting ideas.
Definitely. And now, maybe just take a second before you click away or jump to the next thing.
Just pause for a moment.
Yeah.
Yeah.
Let these ideas settle. Think about, which of these steps really hit home for where you are right now. What's your next logical move based on what we talked about?
What's that one action you can take?
Exactly. Just give it a moment's thought.